Jim Paulsen is Chief Investment Strategist at Wells Capital. He joins me now from Minneapolis. And Jim, you recognize that we will have big corrections this year, no?
Oh, sure, Betty. I think, the easy money of last year is over. It's going to be more run and fill, and we're certainly doing that. But I think the trend is still clearly higher. We've sort of been dislodged here in the last few weeks by different events, from Fed tightening fears to China tightening to Greece.
Right.
But underneath all this, I think the economic and earnings fundamentals, Betty, is what ultimately is going to drive this market either higher or lower, and on a sustained basis. And that news, I think, remains very, very positive. That's why I think we still got more upside in this market here before the year's out.
But we have had, some quite choppy economic data, haven't we not, Jim? I mean, we've had some poor data out on the housing front, the same thing with consumer confidence. So I wouldn't exactly say that the fundamentals, the economic fundamentals as seen by the data recently, really shows that we're in a very firm recovery.
Well, I don't know. I disagree. I mean, yeah, not every data point is outperforming at any point in time. That's the case. Some of them even are weather distorted now, which we'll get into even more in the next couple months, Betty. I totally agree with that. But I think the vast array of data coming off almost 6% fourth quarter real GDP, another great earnings quarter here for the vast majority of companies that have reported. We've got industrial production, which is on fire. We've got the ISM NAPM, which will come out here this morning, but it's in the upper 50s, manufacturing expansion. Retail sales have been climbing at about 5.5% pace. I think, by and large, most of the data is still very positive.
And yet the jobs data though, which is coming out at the end of this week, for instance, shows that unemployment, though, is still around this 10% level, not likely to come down, at least for most economists. What they say is not likely to come down that much. So you still see an S&P going up to 1350, even if we remain at high unemployment.
I do, Betty. One of the things that I recently put out was I went back and looked at the relationship between unemployment rates and future stock market returns back to 1948, since they've been keeping that data monthly. And I know that people are very concerned that high unemployment rates are going to act as a hurdle to future growth or future stock market returns. And I agree the unemployment rate is going to stay high for the next few years, which it did after the early 80s peak as well. But I don't think it's a barrier to future growth or to good stock market returns. Historically, if you look at the highest quartile unemployment rate since 1948, you'll find that stocks returned during that upper quartile unemployment rates more than 20% per annum, whereas in the lower three quarters of the unemployment reports, the stock market only returned about 7.3% per annum.
Okay.
Stocks typically have enjoyed their highest or strongest returns from the highest rates of labor unemployment. So it's just the opposite of what people fear.
So in those scenarios, then, what would you buy in a scenario where you are going to see high unemployment rates?
I think that we're going to have high unemployment, but we're going to have solid economic growth. And I would tend to overweight areas that have leverage to that accelerating real GDP, Betty. So I'd stay with the more cyclical areas of the economy. Now, right now, the consumer cyclicals have been on fire on a relative basis, retailers in particular, and so have the industrial stocks. So I'd look at owning those, but I'd look at putting more capital right now into technology stocks, which have pulled back, and also the basic material stocks, which on a relative basis have been coming down a little bit.
Okay, which, by the way, those cyclicals have been outperforming so far this year. Jim, good to talk with you. Jim Paulsen, Chief Investment Strategist at Wells Capital.